Welcome back to the channel, everyone. Today I want to explain how AMC controls the actions and the direction of the wider market and how Ape will cause the squeeze. So stay tuned, then let's make some money. And now I want to dive straight in with the key information. So, it was originally thought and originally theorized that while the wider market was crashing, it was dragging down AMC alongside. But I've got a new explanation and a new theory that the price of AMC actually dictates the wider market. When AMC begins to run up, the wider market runs back towards its highs as well. But when AMC is pushed down and crushed, the wider market collapse begins to resume. Jim Cramer has said live on CNBC that it's scary how much power the Memesters have and actually how much AMC and GameStop dictate the actions of the wider market, not the market dictating the actions of AMC and GameStop.
Unable to hold on to any rebound and is now actually down.
No, I mean, look, the hedge funds want this market down. They're selling the market. We know every time there's been a big meme flare-up, the NASDAQ is down about 12% since it. We're down 6%, so there's a little more to go. The meme hangover is a serious issue. We've seen there's been 7 of them, 6 of them minus 12%. So I'd be very careful. And then we have to worry about Jackson Hole, which everyone's going to be worried to the negative. So by the time we get there, it might be okay. We're in a cyclically down period. And I've got to tell you that it is really, really scary to me how powerful these memesters are in terms of hijacking the narrative.
We can see here, looking at the chart of AMC, as AMC began to run back in March, the market followed alongside and pushed back towards the highs. But as AMC was suppressed, as it was halted, and as it was pushed back down, the market at the same time was slapped down as well, even further. And again, here in August, AMC was running up as well, and that caused the wider market to be pushed upwards alongside. Now AMC has been slapped back down, the market is also rolling over and is taking a tumble as well. As AMC has been pushed down so heavily, I expect the S&P 500 to continue falling over the next few weeks and could potentially set some new lows. Now I think a large portion of this blame can be pinned on those that are halting the price of AMC and GameStop when they start to run. Obviously, if AMC and GameStop weren't halted back in March and back in August as well, they would have continued running, potentially caused the squeeze, and the S&P 500 would have continued to run as well. Now, I think the reason for this and the explanation is because when AMC has been pushed down and begins to get a bit more volatile, these hedge funds begin covering their shorts. They start by covering their shorts in growth stocks and then begin covering their shorts in the wider S&P 500, resisting covering their AMC and GameStop shorts as much as they possibly can. Covering these shorts in these growth stock names and covering these shorts in the S&P 500 obviously begins to push the market back upwards and it starts heading back towards new highs. But when AMC becomes more volatile and it starts running up and shooting up and then gets halted, these shorts basically pile back in, reshorting AMC, reshorting the S&P 500 and reshorting growth stocks as well. All of that additional shorting obviously pushes the market down further and further each time, and that is why the market has been crashing. And in terms of those halts, Bigham's tweeted saying this was one of the things I wanted to address, but I was banned. And guys, if you haven't already, be sure to sign up to Moomoo right now using the link in the description below. You can currently get 10 free stocks worth up to a whopping total of $25,000. Moomoo is very easy to use, it's incredibly customizable, they've got tons of technical indicators and advanced charting tools. From Moomoo's latest customer agreement, they officially state they do not sell your order flow to market makers like Citadel, and therefore Moomoo is brilliant for buying those AMC and GameStop shares. On top of that, Moomoo was one of the few brokers that guaranteed and delivered every single Ape share before Ape started trading on Monday before the market opened. He said the committee does not control the halts, they control the rules to set the halts off. These limit up, limit down stops were to prevent a market crash back in 2008 or 2010 when they were introduced, but like always, are half-assed band-aid attempts at the bigger issue, as Dave Lauer stated. Dave Lauer tweeted saying there is not a committee in charge of determining which stocks are halted. There was a committee to determine what those predefined rules should be, which resulted in a limit up, limit down plan. Basically, the halts happen after an extreme price movement over a 5-minute window. He said the parameters are variable depending on the time of day and the type of stock and the price of stock as well. These were put in place after the 2010 flash crash as a band-aid solution to try and prevent future flash crashes. He said, I believed then that they were a mistake and still believe that to this very day. They addressed a symptom, but not the underlying cause of volatility, which is varied. And that's why we're seeing AMC runs up like it did back in March and like it did here in August, but is then halted and slapped back down by those shorts. And Hoz believes if this continues to happen, he said in a couple of months, the stock market will crash, and as a result, the economy will crater and fall into severe recession, accompanied with massive layoffs. He said people will lose their homes and poverty will rise to levels last seen in the Great Depression. Considering AMC recently has been smacked down so heavily, I also expect the S&P 500 to continue rolling over, continue tanking, and I do expect it to set new lows. Obviously, GDP will follow, a recession will follow that, job losses will increase, and homes will be lost as well. Unusual Wells believes this is actually already happening. He said the US mortgage industry is seeing its first lenders go out of business after a sudden spike in rates. The wave of failures that's coming could be the worst since the housing bubble burst around 15 years ago, per Bloomberg. So clearly we're already starting to see a number of small banks and a number of mortgage lenders already going out of business as rates have risen and demand has fallen. If these lenders aren't writing new mortgages, they're not generating fees, they're continuing to pay staff, and that's why they are going out of business. Rates are up, inventory is up, but nobody wants to buy homes because nobody can afford them as a result of inflation and as a result of rising rates. Now, obviously, these rising rates could cause a massive wave of failures that could be the largest seen since the housing bubble burst. Again, that supports Hoz's theory of massive layoffs, a severe recession, and people losing their homes, all while the stock market continues to crash. And effectively, the stock market will continue crashing as AMC is being halted and then pushed back down by those shorts as they reshort the wider market and growth stocks as well. But as Jim Cramer said, us memesters are powerful, and we do have a lot of power in the market, and we have been pushing AMC and GameStop back up time and time again. And it seems now Jim Chanos is also changing his mind and believes that actually Ape could squeeze. He still believes in shorting AMC as he still believes he's right, but he also believes that he's right in thinking that Ape will squeeze, and that's why he's gone long on Ape. If we enter the mind of Jim Chanos, he obviously believes he's right by shorting AMC and he thinks he can bankrupt the company. But obviously if he's going long on Ape, he thinks or he knows that Ape will squeeze and wants to make some money there as well. I don't know if you saw this interview, but Jim Chanos basically said that he's reopened an AMC short position, aka added to his AMC short position, but he's actually gone long on Ape. Therefore, he obviously believes the price of Ape will increase and he wants to capitalise off of that by going long. Maybe Jim Chanos knows that the shorts are more stuck on Ape and have less flexibility, and therefore he believes Ape will squeeze. Now, obviously, I personally believe that both Ape and AMC will squeeze, and that's why I'm still long on both of them and haven't sold off any of my shares in Ape or in AMC. Potentially one squeeze could trigger the other squeeze. AMC may squeeze first, squeezing Ape, or alternatively Ape may squeeze first, triggering the AMC squeeze. And that's why I don't think it's a very smart idea that many of these YouTubers like Wrench Capital and Matt Kors have been selling their Ape shares. Wrench Capital tweeted saying, "I just sold all of my Ape and used every dime to buy more AMC. He said this decision was not made lightly and I'm more bullish on AMC than ever." Part of the reason I don't think this is a good idea is we've been buying AMC shares every single day for the last 18 months and haven't yet caused the squeeze. I don't think me individually buying an additional 50 AMC shares will all of a sudden cause the squeeze tomorrow. However, I do believe that by holding my Ape shares, it makes it more difficult for these shorts to get their hands on Ape to close out of their new Ape short positions. And obviously, if we've even got hedgies like Jim Chanos going long on Ape, he clearly believes the price of Ape is going up and wants to benefit off of that upward movement. As I said in one of my previous videos, Fidelity announced that any shorts that were shorting AMC before the dividend date are now shorting AMC and Ape automatically. The shorts are obviously going to want to exit out of their ape short positions, as it's much more difficult to short ape. They have a lot less flexibility, and therefore to close out of their ape shorts, they have to buy ape shares. Therefore, I'm going to make it more difficult for these shorts to close out of their ape short positions. I'm going to continue holding my ape shares until ape squeezes. As the Vegas Ape tweeted, he said it's very telling that multiple YouTubers with large followings have now claimed they've sold all of their ape shares before it's even been delivered to many AMC shareholders. Such trouble, in fact, that even some of the largest short sellers like Jim Chanos are actually going long on ape because they know that ape will move upwards and they want to benefit from that price rise. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.